Hello, everyone. This is This Week in Coverager. My name is Nick Lamparelli. I am in podcasting headquarters in Naples, Florida. This is the podcast where we talk about some of the hot topics that have occurred in insurance, insurtech, fintech, things that we cover on Coverager and what people have clicked on and what people have commented and engaged on. As usual, I have my co-hosts in podcasting headquarters in Queens and Brooklyn. I have Avi and Shefi. Hey there.
Hello.
Hello,
Hello.
How
everyone.
are you?
Hi. Okay, so interesting news week this week. So I'll kick it over to Shefi and we'll run right into topic number one.
Topic number one. Zurich is looking to buy MetLife auto and home business for $4 billion, which rings very similar to what Allstate recently did with National General, pretty much around the same price of $4 billion. Now, in terms of MetLife, they've had a challenging, at least third quarter, 68% down in terms of auto and home in the US. Not necessarily because of COVID, more just catastrophe business. But again, they want to get out of a business that they're not performing well. So more consolidation as we expect, and just, for the comparison sites of the world, that's one less brand to worry about. But we'll see. This is still in talks, right? It's a near deal. We'll see what happens next week.
Yeah, the branding of that is I think MetLife was my first auto insurer. Wait, I'm not going to give you the date because that's just TMI, but it was my first auto insurer, and I was always puzzled with, wait a minute, isn't that a life insurance company? Why is MetLife doing auto and home? I was always confused by that branding.
So let me tell you a story. When I came to the US, I used to work on 90 Park Avenue and right in front of the MetLife building.
Yeah.
And I found the streets to be, actually the streets in Manhattan are really easy, but first time around, it's kind of confusing. Where do you go? Like, where's First Ave versus West, East versus West, North versus South? And I thought that my sign would be, if I see the MetLife logo on the building, then I know that I need to, that my back has to be to the logo if I want to go home, because I was living downtown. But I'm pretty sure that the MetLife sign is like across, like from the front and the end. And
Yeah.
there was one really hot day where I just got lost just around Grand Central trying to figure out my way home. This is probably like the first week of being in New York City. I'm not sure even if I had a cell phone, and if I did have a cell phone, I don't think I knew how to use it. But that's that's my recollection of MetLife. And of course, there's Snoopy, and Snoopy is gone. But I don't think that many people will miss MetLife Home and Auto.
Did you end up in Harlem?
No, I ended up in circles, and it's like, how do I get to like 22nd and 5th?
Well, at least we have those stories. But yeah, it was confusing. It's amazing that $4 billion is big book. For something where you quiz most people. I don't think most people would realize MetLife does auto and homeowners. So that's not trivial. That's pretty good size. But it gets to what's your core business, what's your core business philosophy, and if they can't put any effort or energy into it, then they should divest.
Yeah. And they're definitely doing more on the benefit side, and they acquired a digital will company. So, focus on B2B. Yeah. Just get out where you're an underperformer and play to your strength.
Yeah. Anything to add on?
I get their Instagram ads, which I don't think they're, very intriguing, but MetLife Auto and Home, 2 hours and you're back on the road. That's like after a claim. That's their promise. In 2 hours, you're as good as new. And I think kind of like a weak messaging, but it's interesting because, the whole group benefits, and we talk about this, having, these platform providers, payroll providers offer you users, business owners, employees. They couldn't crack that to get, the auto and home piece as well, to say to a big company, well, you got life insurance from us, 1,000 employees, why not try and save for auto and home as well? So I wonder, I mean, obviously there's the open enrollment and the benefits manager and all of that. And employees, obviously, they choose their benefits and they move on. I wonder why there wasn't more of an effort to try to get auto and home, because, some payroll providers are now integrating benefits beyond health and life insurance. But I guess it wasn't a focus, or maybe it wasn't up to them. Maybe not up, ADP and Paychex and Gusto and other companies were not big on PNC yet. But yeah, if that's not your strength and you could grow in other areas, just go for it.
Insurance accounting is really messy. So if I were one of those companies that offered benefits, like, that's something where, if someone does an endorsement and like it gets messy trying to figure out what the net change is, then figuring out how that's going to be allocated in your paycheck over the course of the next policy period. When I worked at an agency where we did agency bill, Phillips Academy in Andover was one of our customers. So they could buy auto insurance through us and actually have it delivered through their payroll, and it was always messy, really messy. Like it was incredibly convenient, because now you're breaking up your auto payment into much smaller payments, so you miss it less, and it's something that you don't have to think about. But anytime there was a change, it would create this paperwork nightmare of trying to figure out, the customer would complain, then you'd have to say, okay, well, there's 13 paychecks until your renewal. And so it was, you'd have to be like a mathematician to kind of figure all that stuff out. It was messy, Yeah. But one last thing before we go to the next topic. I remember now why I had MetLife Auto and Home, why they were my first auto insurer. It shows you like how much things have changed. They were the only one that would take my annual premium and divide it up. If you did, what is it called? The payment from your checking account. If they did that, they would break it up into 12 monthly installments. They were the only company at that time that I could find that would do that. I was like 18 years old. I couldn't afford to put 20% down. So having it broken up was like something I could afford and budget for, and that's why I became a customer. It's like in insurance, like you get customers that are very economically sensitive, and they'll choose you if you make it very easy for them to buy. So anyways, we'll transition over to topic number 2, which is the one I'm really salivating over to talk about, because I think there's a lot of different angles we're going to take on this. Let's get controversial. So who wants to bring that one up?
Go for it, Avi.
So General Motors announced that they're venturing into insurance once again, and Shefi wrote a piece about this, the history of General Motors. And apparently, I was actually on a LinkedIn debate, and some people really took offense, and they presented as such a challenge for General Motors, as if insurance companies and insurtech companies are not challenged, as if they figured it out, as if they're performing so well. And everybody has challenges, the insurance pricing and filing and customer service and claims. And, everybody is struggling with that. The benefit, the advantage of General Motors is in the distribution. And that is a big advantage. And what's interesting is that, there's a big piece here of really, when you look at, many are talking about, that was one of the topics of risk preventions, being proactive. That was one of the main topics of InsurTech. And in reality is a car company is an entity that can do that. And they've been doing that for years with new technologies in the car. And of course, now comes the whole connected vehicles. And we talked about this several times. And, with General Motors, they have 22 million connected cars globally across the world. So obviously, when people are leasing or buying newer cars, that number goes up. And there is so much that they can do, so much data that they have that insurance companies do not even know. And it's not just that. Like, I think some don't understand the touch points, the offline touch points that a car maker has as well. And in North America, General Motors has 4,743 independent authorized retail dealers. And guess what? You need to take your car once a year to get it serviced. Some people take it often because, they're paranoid. They want to get new tires, or they want to make sure everything is good with the oil and all that stuff. And that is an opportunity for a dealer to come and say, hey, Nick, you're going to be here for 45 minutes at least. Would you like to look at insurance? Now, we didn't even touch the topic of there is incentive here to have that insurance. And by the way, we're not saying that GM should be the insurer. They're obviously not the insurer in this case. But if they can offer benefits in terms of better pricing because of the data, because they know who you are, they have the background check, they know your credit score, and they also know how well you treat a car. So if you come in for your yearly maintenance and they see that you brake like an idiot, or that you don't get that bumper to put behind so you don't get scratches in your car, it tells them something about you, and something, again, the insurance company does not know. They don't know if I put the bumper. They don't know if, and there's so many elements, and that is where we see the future of connected vehicles. The data, everybody's talking about distracted driving, of texting while driving, and that's something a smartphone-based telematics could pick up. But there's other forms of distracted driving, like people eat in the car and they're distracted, or they look at a beautiful woman crossing the street and they're distracted. So there's other elements, and really the only company that is in a position to act on this data, not just for better pricing, but really for a risk prevention, is a car company. And for that reason, insurance companies should kind of say, well, they have all the capabilities. Let's see how we can partner. And obviously, again, you'd want to partner with them. They have the power and that distribution aspect. And it all really depends on how serious they will be. And, Tesla, obviously, they launched an insurance offering, and they're selling. They have a big team of insurance agents working, they're selling. And whether or not it will reach its full potential, yet to be seen. But they have such a huge advantage over insurance companies and startups. To me, when I saw that LinkedIn post, I said, what are you even talking about? You're not even in the game.
And Rivian, right? So we always have this thing when we do our research. We say 1 is an outlier, 2 is a coincidence, 3 is a trend, right? So we know Rivian wants to enter insurance. So we know Tesla is doing something with insurance. We know General Motors is repeating history. And by the way, back in the 1930s, when it started selling auto insurance, it was super successful. The only thing that got them to fail was really going into the mortgage business and into loans or whatever it was with mortgage, more than it is with auto insurance. Auto insurance was a sure deal. So if we break it down, insurers typically have 5 functions, right? They've got this regulatory know-how that they need to know what to do. They've got, underwriting that they need to take care of. They've got distribution, whether it's agency channel, direct. They may have a branding going for them, right? But the focus here really is distribution. And it's not necessarily General Motors versus an incumbent, because General Motors is basically going to be offering products by home site. And, phase 1 is going to be the same kind of underwriting as everybody else. And maybe in the future, they're talking about taking all this alternative data into the picture. But then once it bleeds into different kind of underwriting, then we may be able to see the full potential of what is happening here. But I think, the first victim is going to be the zebras of the world, because somebody's finding a way to bypass Google. And that's what this alternative distribution is all about. So when we say alternative distribution, and Avi and I were speaking with insurers, and we always start, you tell us what your definition of alternative distribution is, because that may mean something different to, depending on your primary channel. But when we're saying alternative distribution, what we mean is there's an insurance entity and a non-insurance entity, whether it's automotive, fintech, legal, etc. Right? So they've got a captive audience. They got somebody that likes the car. Let's get insurance.
I don't disagree. It's a distribution play with potential benefits for underwriting and loss control and risk management. Could be a springboard to autonomous vehicles. It's, just again, it just emphasizes that if you're going to come into this area, like if you can't get customers inexpensively, it's just, I don't know how you end up making the economics work on this. And they, if Homesite can get, they pay a commission, right, to GM for the privilege of being able to do this. And then every policy that gets sold, like that seems like a very inexpensive way to get in front of potentially millions of customers. It's, it's not.
Yeah, but 2.8 million general, 2.8 vehicles were sold last year. So it really is millions of customers.
Yeah.
So even if they reach a portion of that, what's the big deal of setting up an Onstar Insurance Agency? That's the issue. Yeah.
Is OnStar available to any other manufacturer? Is that like very specific? You can only get OnStar if you're a GM car.
GM car, Chevy, Buick, Cadillac, and you have the app. Like I have a Volkswagen, I have the app. I get notifications. So they have presence. In my smartphone. So that's a huge advantage. Volkswagen, CarNet. They have their own connected car version, and again, they have the data. They have it. It's a matter of, do they want to take it seriously? And again, it will fall down to price. Like if the price is more expensive, then obviously a consumer is not an idiot. He's not going to buy if, it's going to be very expensive. But if, they really do look at it from a perspective of, we could give you better pricing and we learn things, and we could, as Tesla is saying, redesign the car if needed, reduce the cost to repair cars after a claim. If they go that route, then again, it's going to create a trend. And then every other automaker is going to be in the game, because you have to. You have to. And what you'll have is, they talk about the bundling. Oh, so people that like to bundle, they won't do it. They can bundle home and auto as well. Progressive doesn't have exclusivity and bundling. All the Robinsons, they only go to Progressive. So everybody could play that game. And I think really the benefits, and to me, that could be like in the future, there's going to be a trade-off. And this is the trade-off that insurance companies will never have, where you have this amazing car brand, you love the car, but that they tell you have to buy insurance from us, like we're the insurer, and they have a really bad claims experience, but you really love the car, but you're taking a risk. On the other hand, you have a company that sells you a car that you don't want so much, but their claims experience is amazing. So what company do you choose? And I think that's, could be eventually down the line, the benefit of car companies, where they could really tailor the product to you. And of course, not everybody's going to agree, but many will. And by the way, the people that are buying the newer cars with all the technology, that's the customer that you want. That's the preferred customer that an insurance company wants, not someone that is going to replace an insurer every 6 months.
I think there's fear of missing out. So Shefi, you're right. It's going to, like, soon we'll see another car manufacturer do the exact same thing. Like it's going to happen. And if that continues on, that's going to put a lot of pressure on anyone that's selling auto insurance. I think the whole risk management thing should be tabled, because we don't know if the regulators will even allow it. Like, Avi, I don't know how much the regulators will allow tailoring of insurance products, but I don't even think it matters.
Well, right now,
like GM will get a certain percentage, right? Like they'll get the ones where they can actually make a cheaper product. They're going to get a percentage of those customers. The ones that is more expensive, they'll stay in the traditional market. But if Volkswagen and Ford and these other companies start coming in, they're also going to start chipping away at this, and the pool of available policyholders to get is just going to get smaller and contracting. The overall like aggregate industry dynamics for insurance, auto insurance, with autonomous vehicles kind of dangling out there as like the brick wall, like it's going to end here, doesn't bode well, in my opinion.
And Chevy today has the Smart Driver by GM. So it's a program where for 90 days you drive, they measure how you drive, and they send that sample data to Progressive, Liberty Mutual, and Nationwide. Of course, not in every state. I believe California, New York, and there's another state that it's not available. It is really, as I said, the product right now is not going to be differentiated. It could be differentiated from a messaging perspective, like, have your car, well, we know how you drive, just like Root, and Root saw success with, pay how you drive. But really distribution, if they take it seriously, those insurtechs and insurance companies that are competing on Google for waiting for people to go search, that is going to dry up. And the whole display and, being on social media, if I have now my policy documents with my CarNet or the Smart Drive of Chevy or OnStar, whatever that is, it's going to be hard to move me because, again, they know things and they have all this preventative data, by the way, of, mechanical breakdown. That's like a thing. Geico sells that. They know before, hey, bring your car. It's going to be a problem if you don't bring your car. So that is something that they have. And again, people are saying, is it going to be worthwhile? How much money will they make? How much money are insurtechs making from selling insurance? So if
it's just about having the one point of contact that you want to have or you need to have, as opposed to having a few. Yeah. So you'd rather deal with General Motors or you'd rather deal with Gusto, just like we do in small business.
Yeah. So
and just because something didn't work in the past doesn't mean it's not going to work in the future. We get that argument a lot. So there's always somebody in insurance that's going to remember something bad that's, Esurance did, or another company that's no longer with us.
Insurance today is a completely different beast than it was like 5 or 10 years ago. So history matters, but I don't think it matters that much. Shall we wager $1? Who's the next auto insurer to follow suit?
Well, Mercedes does it in Germany, and I think every company, many automakers today work with data providers, and they provide driving data to insurance companies. So they do that, and again, it's not even from a price perspective. Like, it's not about money; it's about doing it because you have to for the customer experience. To say. We do that as well. And by the way, many talk about, many look at insurance before they buy a car. How much do I need to pay in insurance for this type of vehicle? That's a big factor when you buy a car. So if they can come in and ease your mind a little bit and say, look, you'll be fine.
Yeah.
That is a major decision. That is a major decision.
You're the whole blending the insurance into the financing element of it and providing a discount on the financing as well.
That as well, yeah.
Ooh.
And eventually, as you said, you want to bundle. Let's make some more money off of bundling your home, or if you have anything else.
Yeah. No, that's really interesting. Distribution. Yeah, that's it's always been there. So before we jumped on this, I was talking to someone in the pet insurance space, and the whole affinity group thing came up, and this is similar to that. They have a captive audience. They have 2 million, they sell millions of vehicles. They have these people, they have the technology to connect to them. These people are coming in for oil changes, and this is one additional element. And if I were an auto insurer, I would continuously be worried because how do you match that? You don't have the touch points that these other distribution channels have. We'll see. I'm betting on Ford.
Ford is Ford did right now with Metromile and State Farm, I believe. They did a program of the getting data. So yeah, Ford is a big player, and I think again many are going to go, and I wonder what the approach will be. Will they choose one insurer? Will they choose several? But that is a significant distribution play.
Yeah, absolutely. Well, it's thank you, Avi. Thank you, Shefi. Next week is Thanksgiving, so unless there's like a huge announcement where we have to like cut into primetime broadcasting to tell you this urgent message, we'll see you in a couple weeks. So for everyone that's listening, be safe, wear your mask, wash your hands, have a happy Thanksgiving. Don't get that $10,000 fine in New York. So please be careful. Avi, Shefi, happy Thanksgiving.
Happy Thanksgiving.
And have a happy next week, everybody. So for Avi, for Shefi, I'm Nick. Thank you, everyone.
Bye-bye.
Bye.